Welcome to Smart Choice. Hello, I'm Green. Thanks for taking your time to visit, and today we'll talk about why financial literacy is so important for everyone. And it pays to be literate, financially literate, for the beginner or the most astute. Let's start with the basics. What is financial literacy? First, not being illiterate, especially today, is easy. Just trying to stay ahead of all the many facets of finance, taxation, and investments is no easy task. So to help you, we aim to be a resource that keeps you informed about the important changes that can affect your everyday decision making. And they do come fast. Well, we'll do all the heavy lifting for you. Just sit back and stay connected to be connected, and we'll help you make better informed decisions. That is our game, that is our goal and our aim. The level of financial literacy varies according to education and income levels. But evidence also shows that highly educated consumers with high incomes can be just as illiterate about financial issues, and it seems consumers are even hesitant to learn. Where do they get the information? Where do they go? The Organization for Economic Cooperation and Development cited a survey conducted in Canada which found choosing the right investment for just a retirement savings plan was more stressful than a visit to the dentist. 5 trends forcing financial literacy, compounding the problems even more associated with poor financial literacy. It appears financial decision-making is also getting more erroneous for consumers. 5 trends converging that demonstrate the importance of making thoughtful and informed decisions about finance is important. Number 1, consumers are shouldering more of the financial decisions. Take, for instance, retirement planning. Years ago, number 2, we had managers years ago that took on the financial burden of the companies or governments that sponsored them. Today, consumers, they're not involved in having to make that decision years ago. But today, they now have to deal with a 401k plan in which they need to make investment decisions and make the contributions to them. The complex options are very, very complex. Consumers are also being asked to choose among various investments and savings products. These products are more sophisticated than in the past, asking consumers to choose among different product options offering various interest rates, maturities, what type of a bond, what type of equity. Are you in sector equity? Are you in long cap, mid cap, small cap, emerging cap? How is the investor to make these types of decisions capable of doing that even today? And deciding on complex financial instruments with a large range of options can impact the consumer's ability to buy a home, finance and education, and especially retirement, further complicating financial decision making. Lack of government aid. The major source of retirement income in the past generation was Social Security. But by the time 2033 comes along, the Social Security Trust Fund may be depleted. That's a scary option. So now Social Security acts more like a potential safety net that may provide enough basic survival, if at all any. Longer lifespans. You know, we're living longer, and that's great. It doesn't mean you need to living longer. It means you need to live in fear all your life. This means we need to be having more retirement savings than prior generations. It means also the changing environment. The financial landscape is very dynamic. Now a global marketplace. There are many more participants in the markets and many more factors that can influence our markets as we witnessed since the year 2008. Somebody sneezes and the market goes down. The quickly changing environment created by technological advances, even such as electronic trading, makes the financial markets even swifter and more volatile. Taken today and together, these factors can cause conflicting views and difficulty in creating and implementing and following a financial roadmap. Do you have one? Too many choices. Banks, credit unions, brokerage firms, insurance firms, credit card companies, mortgage companies, and financial planners and other financial service companies are all vying for assets, creating confusion even more for the consumer. So why does financial literacy matter? It's critical to help ensure consumers save enough to provide adequate income in retirement while avoiding high levels of debt that may result even in bankruptcies and foreclosures, as we witnessed. A few years ago, a study from financial services company tgacapitalmanagement showed that those with high financial literacy planning for retirement and in essence have double the wealth of people who do not plan at all for retirement. But they too pay unnecessary hidden fees and non-tax deductible commissions. And boy, that is changing today also. Conversely, those with low financial literacy borrow more and very likely don't even have the opportunity to participate in many of the things I'm even talking about. So ways to improve financial literacy: if financial advice isn't personalized, situational, and actionable, most Americans won't even remember it. The role of parents is very helpful in helping this financial literacy, and there's quite a bit of information out on the net. I suggest we'll find it for you, we'll send it to you, and we do have some of that on our web currently. And poor financial literacy today is costing investors $10 billion a year. Financial literacy is on the decline in the U.S., but advisors and individuals shouldn't assume they are well versed in all areas of personal finance. So what we want to do is understand why we all need to be more financially literate. A better understanding of personal finances and money in general will make your life a heck of a lot better for your future. Some of the upcoming topics we posted on the site along with video, audio, and other related helpful materials. Here's a few questions to consider today. What distinguishes the financial sectors from the banks? What are the main factors that drive share prices in the financial services sector? What is the difference between portfolio management and financial planning? What are the major categories of financial institutions and what are their primary services today? What is the best way to pay less taxes, income taxes, investment taxes, college funding? What is the difference between a fiduciary and a broker financial representative? You know, this one area alone will help individuals identify not only as an individual but also as plan participants and plan sponsors. A fiduciary has a legal obligation to work for you without a conflict of interest, rather than selling a product, especially not just a product but for a commission. Understanding this alone can save investors thousands of unnecessary costs and at least be explained by a fiduciary if that kind of a cost is justifiable or is in the best interest of an individual or a plan sponsor or participant before making that kind of selection or decision. What is the difference between a mutual fund and an exchange-traded fund? Big differences here, but you again want to become more literate about it. Do you know the difference between a closed-end fund and a closed door? Should I set up a stretch IRA for inheritance purposes, for my children or family members, and will it remain safe from my creditors, of my estate, and of their estate? What is the IRS rules about required minimum distributions regarding stretch IRAs? What is considered a prohibited transaction when you roll over a retirement plan account to a personal IRA account? You need to know these things. The bottom line, any improvement in financial literacy will have a profound impact on consumers and investors and their ability to provide for their future while avoiding the pitfalls of debt, unnecessary hidden fees and commissions, which as a fiduciary should be avoided at all costs, or at least be explained before you make the decision. Recent trends are making it more imperative that consumers understand basic finance because they're being asked to shoulder more of the burden of investment decisions in their retirement accounts while having to decipher more complex financial products and options. The tasks are not easy, but a better understanding and more knowledge can ease the burden tremendously for you on a day-to-day basis. That's what I'm committed in doing here at Smart Choice. We aim to empower our readers. We aim to help you make smarter choices. We aim to provide choices about you on a fiduciary understanding, unbiased, not product-pushing mentality. And most importantly, the cost of financial literacy costs Americans billions each year. Ignoring financial literacy is something you can do for yourself, your family, your business, and the community. Knowledge is great, action is imperative, and I am humbled to be of help to you in any way I can. But without a plan, without action, you'll have no results, so it's costing you. Take action, let's get connected to stay connected, and be sure to surround yourself with good people and good things. Smart Choice is designed to help you and I extend it without any obligation, and I hope you enjoy it, and I hope you find it to be resourceful and informative. Please let us know if it has made a difference to you in any of your decision making as you go forward. In the interim, you can always contact me, Mike Green, at mgreen@tgacapitalmanagement. My phone number is 508-224-9646. We are on the web at www.tgacapitalmanagement.com. We also have a presence on LinkedIn, so I'm easily found by going to our website, and you can go to our LinkedIn. And also, be sure to check us out through our affiliates and through our compliance divisions. We're very helpful and meaningful to make that available to you. And our full ethics disclosure and all about us is found at our website. So look forward to hearing from you. Let's stay connected to be connected. And if you have any questions, feel free to reach out and email us or give us a call. Thank you so much, and have a great day.